All right, let's dive into a fascinating puzzle in the world of Bitcoin investing. We're going to talk about why some people are happily paying $2 for just $1 worth of Bitcoin. It sounds like a crazy deal, right? I mean, who would do that? But for a whole lot of investors in a company called MicroStrategy, this isn't just a crazy deal. It's the very core of their investment strategy. Let's break down why. You see, MicroStrategy's stock, which trades under the ticker MSTR, is a real head-scratcher for a lot of folks. It's supposed to be a way to invest in Bitcoin, but its price action is, well, it's wild. Sometimes it blows past Bitcoin's gains, and other times it just gets left in the dust. And that disconnect is exactly what we're here to figure out. To solve this puzzle, we really only need to understand one key metric that analysts use. It's called the MNAV.
Okay, MAV sounds complicated, but it's not. All it does is measure the premium, or, sometimes a discount, that investors are willing to pay for the actual Bitcoin that's sitting on a company's balance sheet. It's like a direct window into what the market is thinking.
So an MNAV of 2.0 means investors are literally willing to pay $2 for every $1 of Bitcoin the company owns. This is the heart of the puzzle. Why in the world would you pay double? Now, this whole idea of paying a premium for an asset, it's not some new weird crypto thing, not at all. In fact, it's a super fundamental concept in the traditional stock market. And if we look at an old school metric, I think it'll all click into place.
Let's compare this MNAV thing to something you've probably heard of a million times, the price-to-earnings ratio, or PE ratio. It's basically the exact same idea, just applied to a totally different kind of asset.
Think of it like this. With a high PE ratio, you're paying a premium for a company's future earnings, the profits you hope they'll make down the road. With MicroStrategy's high MNAV ratio, you're paying a premium for the assets it holds right now, because you're betting that the pile of those assets is going to grow like crazy.
So, paying this kind of premium really brings us right into a classic Wall Street debate. It's the old battle between growth investing and value investing.
Value investors, they're the bargain hunters. They want to buy a dollar for 80 cents. But growth investors, they see things differently. They're totally willing to pay $2 today for something they believe is going to be worth $5 tomorrow. They are paying for future potential, pure and simple. Now, from a value investor's perspective, this is a massive red flag. I mean, Benjamin Graham, Warren Buffett's mentor, built his entire philosophy on not paying what he called exuberant multiples. Why? Because that investor optimism can just evaporate in a flash.
And that's the big danger for an MSTR investor. If you buy in at a high NAV and the market suddenly loses faith in that growth story, that premium can completely collapse. You could lose a huge chunk of your money even if the price of Bitcoin doesn't move 1 single cent. Okay, so this brings us to what's really driving that premium. It's not just a simple bet on where Bitcoin's price is headed. No, it's a very, very specific bet on MicroStrategy's CEO, Michael Saylor, and his really unique strategy. The core belief, the thing that's propping up this whole premium, is that Michael Saylor is going to keep growing the company's Bitcoin stack by a lot. We're talking maybe more than 25% in a single year. Investors are paying a premium today for the Bitcoin they think he's going to buy tomorrow. So the investment thesis is really a cycle. Here's how it works. You buy the stock at a premium because you fully expect Saylor to go out, raise more money, buy more Bitcoin, and in doing so, increase the amount of Bitcoin that's backing every single share. You're basically trying to front-run his next big purchase. And honestly, you can't really argue with the results. Before he did this, Michael Saylor himself admitted MicroStrategy was a zombie company, just kind of shuffling along, unable to compete with the big tech giants. Going all in on Bitcoin, it changed everything for them. What he's done is seen by a lot of people as kind of hacking the system. He's using all the old school tools of traditional finance, issuing stock, raising debt, to aggressively scoop up a completely new kind of asset. And in the process, he's turned his company into one of the largest corporate holders of Bitcoin on the entire planet. So at the end of the day, that premium on MicroStrategy isn't just a bet on Bitcoin. It's a bet on Michael Saylor. It's a bet on his relentless, never-gonna-stop acquisition strategy. It's a bet on growth personified. And it leaves every single investor with a really critical question. What happens to that premium when the person is no longer part of the equation?